Welcome, welcome. Who's on already? If you can let me know that you can hear me okay, give me a thumbs up. That would be great. And we'll wait just one more minute for people that are jumping on and get started. Everybody hear me okay? All right, great. Well, it's straight up 12. I want to start on time and then you can end on time. Again, you'll be emailed a copy of this presentation as well. So I'm doing these just once a month, honestly, just to go over the state of the market for Shelby County and kind of a bigger picture. Okay, thanks, Keith. And Mark, thanks for letting me know. So just overall picture of what you can expect and kind of what's going on. No slant of anything, just really want to look at the numbers. So if you have any questions as I go along, just put it in the chat as well, and I'll answer them for you as well. So if you're new, don't know about me, run your Key To Memphis team here at EXP, sold more than $2 billion worth of real estate in Memphis over the last 36 years, long time. So that's landed as number 2 company in the state of Tennessee for realtors, number 2 teams with our previous real estate firm for 10 consecutive years, daily news journal, different podcasts, and different things. All right, so just to update, I did this 2 months ago. I didn't do it last month, but my husband and I went on a trip actually to Europe. So I finally got there with all the nightmare with travel and everything. So we went into Italy and then did a Viking River cruise from Basel, Switzerland up to Amsterdam, which was amazing. And then I just got back from spending a few days there being a nanny for my grandson, which was super fun. So I had a great time with that. All right, so the total market overview for July of 2023, just specifically in Shelby County and surrounding area, total home sales 1,762, and that's up from 43% from May. Median sales price was 240 from a year ago. That's down 4%, not much. And honestly, that people are still adjusting to what the market is, as opposed to 12, 18 months ago, where you could put whatever number on it and ask whatever you want. So I do blame that on just everybody kind of adjusting to the new market, back to normal market, not the unicorn years, which we talked about the last time I did this. Monthly sales volume. So inventory is up 4% from May, so 3,192 homes right now. Typically, we're 4,500 to 5,000 in Memphis as a whole. And monthly sales volume is 2 billion, so down 24% year to date. So less transactions. So looking at mortgage rates and affordability, as we know, with the interest rates, 30-year fixed mortgage is $500,000 on a $500,000 home with 20% down. Today at 7%, that's $2,661, just principal and interest, no taxes and insurance, and the same payment at 3%. We can see is $1,686, so $975 more a month in higher payment. Obviously, just based on, the current interest rate. So we're seeing some buy downs, different things like that people are doing. This is from MBS Highway Housing Survey, just talks about where we are here in the Southeast activity, up 54%, and then pricing pressure, like 31% of this as well. All right, consumer survey on home prices, which is interesting. So Fannie Mae does this every month, actually. But this was from 2010 to 2022, the consumer confidence of home prices. And we can see that they weakened toward the end of 2022, which that is not surprising at all, quite honestly. Everything that you listen to on the news and everything else is so negative. So it's hard for that not to happen. And, all the inflation talk and all those different things. So that's kind of what we're seeing this year on what's going on in the market, just because consumer, confidence has gone way up, especially like Ohio is just compared to the rest of the years. All right, and then again, we look at this as well. So look at this. This is the first time it was ever been done. Was June of 2010. So that's why we can't go back further, on this. But after the housing crash, this was consumer confidence here. So you can tell, and of course, the pandemic. We all knew the pandemic. Well, nobody knew, I should say, what was going to happen. So the pandemic, everybody thought. I thought, nobody's going to buy a house. We're going to be out of business forever for a long time just because of when that all first started. And then, of course, it went totally different than we thought. But then that's why, you just keep hearing people in the news media giving you, false information about different things for the housing part of it. And it's making people think that it is crashing. So, as this year progresses, that number is coming down. It gets a little bit on that red line there. That they're down, but see, that's still higher than after the housing crash, which we understood why people were freaked out here, but not the case here. All right, so Bill McBride, as inventory picked up sharply in 2022, I adjusted my outlook in October 2022 and wrote house prices, 7 years in purgatory. I noted that a 10% decline in nominal prices now seemed likely. So that's what he said last year. And Bill McBride predicted like 2008, the housing crash of that. So he's very smart, nailed it, was praised for that 2008. But then, however, he's changed his mind. The inventory surge in 2022 was somewhat of a head fake. Some potential sellers quickly listed their homes, probably remembering what happened with house prices in 2006 to 2011 period. But that surge ended pretty quickly. So he's reevaluated what he saw, what he was predicting in the market to what's going on. So as we see, housing is always seasonal. But the unicorn years, 2020 to 2022, basically is what we're calling those years where, nobody's ever seen anything like that before. So we all know there's some seasonality in getting houses ready and putting it on the market, which is spring and summer, which you're seeing here. So what happened in all of these bars, 17, 18, 19, and then 2022. So May, it typically falls off. So everybody lists, getting ready for, spring and summer, kids out of school, buy before you get back into school. And so what threw them for a loop is, as opposed to going down, we went up in June of last year. So what they were predicting is that it was going to absolutely skyrocket with listing inventory. So we're going to have all these listings, interest rates are going to go up, and that's where all the predictions came from, that, this was going to be another huge housing blow. But here's what happened. So after they went up, kind of out of prediction from everything else the years before, they sharply declined. So guess what? Hence we have the inventory shortage that we're facing with today, because that did not happen. So that's why everybody's reevaluating what they thought as far as what the listings were going to do. Then, which led, of course, you hear people talking about, foreclosures as well. And they have gone up. So if you look at where they are, we are up, and you're hearing the news media, it's gone up. All these foreclosures are skyrocketing because they've gone up. Well, guess what happened in 2021? The moratorium. So no, you could even foreclose if you wanted to or needed to or whatever it was. I actually went to a listing a couple of weeks ago, and they even, some of the lenders allowed you to tack it on to when you sell your house. So they have a $36,000 note that they'll have to pay. There's no additional interest on it. So it's just one lump sum. So when we go to closing, they have to pay that off too. So that's, some of the things that they were doing in 2020 and 2021. So yes, are they increasing, but are they anywhere like what we saw before? And no. So, unfortunately, people go through bad divorces, people lose their jobs, there's a death in the family, different things like that, that people can't pay their loans. So, life happens, unfortunately, but it's not like everybody's bailing, and it's like what we have seen in the past. So as you can see, the delinquent rate is on decline. So January 2022 to now, Fannie Mae and Freddie Mac, this is what Freddie Mac are reporting for people that are 3 months past dues on their housing. And not that anybody wants anybody to foreclose, but the more inventory we get back on the market, it kind of helps as well. So Molly, May's overall mortgage delinquency rate matched the all-time low, and serious delinquencies followed suit. Furthermore, the rate of mortgages that were 6 months or more past due, a measure that ballooned in 2021, has receded to a level last observed in March 2020. So again, we're just not seeing, the news media wants to, the sky's falling. So just kind of clear that up too. Bill McBride, back to him again. Foreclosure activity is already at record levels, yet as prices fall, foreclosure activity will probably continue to increase. The activity will be literally off the chart. That was 2008, and he was totally right, nailed it, exactly what happened. Fogged a mirror, got a loan, all those things in 2008. 2023 saying there will not be a foreclosure crisis at this time. Spot on. So what are home prices doing? All right, 48-year average monthly price movement. So you can see, where they are, 73 to 2021. Again, the seasonality. So this does not mean that, things are not appreciating. They just don't appreciate. It's just a deceleration of appreciation as usual, which is normal for what typically 48 years in September, October, November, and December. And that's from Kay Schiller. So again, 48-year average versus 2022 price movement. We saw that the slide before showed what this looked like. This is just a smaller scale version. So 2022, we had to adjust at some point. So that's why the beginning of 22 was, super high. And then it was like, hit the brakes and went down there for a bit. And now we're, coming back to normal. Again, same kind of thing, 2020 to 23. That's why the end of 2022 and the beginning of this year, we saw some adjustments in the market, but you can see where we're headed, going back up again. We just can sustain the appreciation that we had seen. Percent change in home values month over month. This is 3 different companies that do this, Kay Schiller, FHFA, and CoreLogic. So again, we see this, it increased and then it decreased. It's going back up again. Each of them, even though they look at different bits of information, they're all predicting the same thing. January of 22, great, down again. I think we're just adjusting for the crazy appreciation we had and then back up. Again, if that's not enough, same thing, predictions, Zillow, Black Knight, and Freddie Mac. They're all exactly what we've been doing. Interesting to see, 6 different people doing that. So what you've seen, and these are big places too that have huge appreciation. Memphis is not typically, skyrocketing as much for the appreciation as some of these other big cities. But in the top 20 cities since March 2020, look at the appreciation in so many places. I know some of them, these are taking a hit now, but again, the appreciation was huge. So didn't make a bad decision. It's just not appreciating as much as if you're in those cities. So I wanted to go back and look at all of Memphis. So I took their average price of houses, average price of homes sold, and the average price was $214 in 2020, $240, $262, and $267, which I took the end of July. So 20% appreciation is what Memphis has had since 2020. All right, in the end of 2023, home price forecast. So this is the original forecast that they had predicted like the end of last year before we rolled into it. So MBA was like, we're going to, be negative. And of course, if you look at the charts back, it would have led you to that, decision as well. Now the current forecast is, 0%. I'm telling you, they're going to change their mind. In the next couple of months, that's going to be different too. Fannie Mae 1.5 negative. Now the current forecast is appreciation 3.9. Morgan Stanley was -4. Now they're 0. AEI, look at that, -20. Now they're saying 6%. Above Zillow, -7% and 0.7%, sorry. And 5.5 is now the current. CoreLogic 3%. Now they're saying 6.8. So they're seeing things adjust. All right, on to inventory. We're still at historically low numbers, and this was as of July 28th. So same week in 2019, 50% lower. So you can see the difference of where we are. It was a little bit of an uptick, but we're still absolutely negative. So this information comes from MBS. Barry Habib is super smart, studies this all the time. So this is kind of where I'm getting the information from for him. So we looked 2000, the inventory of homes. And again, here's where we were. Like I said, we had 4 million homes at that time in 2007. Now we have 1 million. So we have this much less inventory. And this is the inventory. It doesn't even show what's pending, which we'll get into that as well. So you can see the difference. And you know what else has happened is the growth of our country, meaning more people, more babies, all those kinds of things. So we're really, really at a low number for inventory. So the real story, 1,080,000. But under contract or off the market's 466,000, so almost half of that. So what we actually have is 614,000 homes that are active that you can buy across the nation, not obviously just Memphis. So it's just kind of crazy, you know what that is. So the active existing home listings in the U.S. again. So you can see, you know, here we're going a little bit before 2017. Ebbs and flows, and then of course, you know, pandemic hit and everybody's buying a house, and then, you know, kind of where we are with that. So what this shows is like you're betting against the champ, just how people are like, don't buy a home, all those kinds of things, but you don't really want to bet against the champ. So this is a housing record since 1941, 73, 7, and 1. Means the home prices have risen 73 of those years. It's gone down 7 and been flat for one of those years. So 2020, just saying 2021 doesn't mean a crash ahead. So let's just look at history. So if you look from 1943 through 1947 on the chart, prices went up a compounded 118%. Then after that period of time, so if we look at 1947 on, it's like they went up for 43 straight years. That's crazy. Then from 1974 to 1979, prices went up 93% compounded. Then prices went higher for 10 years before, only going down 1% in 1990 that we see here, and then just was 0% 1991. Then another 14 consecutive positive years. But you know what everybody does? They focus on these years. So all anybody wants to talk about is 07 to 11 in this period of time where housing was a struggle. But all these other times, that's why you don't want to bet against the champ, because 73 years, it's been great. And 7 just equal, and then 1 was the only time that it was down. Great information. All right, again, that's what they're showing you here. And again, the difference is the inventory. I mean, it's supply and demand. It's just the way that is right now. So you've got, here, when all of this went down, obviously, it's like, you had 4 million inventory, and now you're at 1 million. So again, it's still a good time. The last market bottom cycle, 8% appreciation over the next year after the bottom, even with 2.4 million in inventory. So here we go, our 2000, when everything, the bottom hit, still we had a hard time for those years, and then went up, but then 8% appreciation over the next year after the bottom, even with 2.4 million in inventory. So even at this, at 2.5 times the inventory we are, it's 8% appreciation. Still good. So home prices turning higher. Here's everything that's happened with the percent change. This is the real estate values from these different people as well. Schiller, you can look here. For sure, January and February was totally different. Now everybody keeps moving up their appreciation. So everybody's appreciation for 2023, the pace is, as you can see, between 5 and 10% for the year. At 6%, just for numbers, on a $500,000 house, $30,000. So there is a cost to wait to buy. So it's like there's, if you're buying a $500,000 house, but you're thinking, oh my goodness, I can't, I'm going to wait till the interest rate comes down. If you wait even a year for the percentage to come down on the interest rates, which we'll get into that, but they probably will the end of the year or the first of next year at some point. But it's going to cost you, $30,000 to wait to buy the same house a year from now, just because of the appreciation rate that we're seeing. And that's at a lower end of the spectrum. So again, what will the Fed do next? So we're just looking at predictions of this as well. Of course, this is what I've got the next 3 meetings of the Feds on here as well. So it's what's being predicted for the Fed raising rates. And so this is the rate that the market borrows from the Federal Reserve, and then they pass it on to us. So the current target rate is 525 to 550 basis points. So when they meet again in September, and this, as we've been watching this go along, it's been very interesting. Most everybody's either on target or higher, which it has been, as you can imagine. So, but we'll see what happens. So 88% of Wall Street is betting that they don't change it, that it stays where we are. And then there's a small little percent that thinks we're going to go up a little bit. So it'll be interesting to watch that, and we'll keep watching it. November, again, 525 to 550. So they're thinking 60% are saying, Wall Street's betting we'll stay right here. 35 is saying that we'll go up a little bit, and 3% saying even higher. And then back in December, target rate 525 to 550, and a little bit saying that we're going to drop, 5% saying that the rates will drop at that point, and then 58% saying we'll stay put, and another 36 saying we'll go higher, 36% if we average those two in. All right, and then mortgage rates, just the predictions of that for quarter 3, Fannie Mae, all of these are saying an average of 6.27, then quarter 1, 6.07, quarter 2 of next year, and the quarter 3. So I think everybody thinks the predictions are going to be that it's going to go down at some point. For people that think that we're going to be back to where we were, 2 or 3%, that's never going to happen. So it's like, it's just not. So I think we should be thrilled if it's 5% or 6% or something like that you can get for a rate, at this point. So still great money. I think it's cheap money for that, but this is just everybody's predictions for the mortgage rate. All right. So if you have any questions, let me know. You can scan this to get an updated value of your home in under a minute. And if you have questions that I missed or you want to know about, just email me at melissa@keytomemphis.com. I'm happy to answer each and every one of your questions. I'll do it personally. If I need to figure anything out for you, if you want to look at what your home's worth or what payments would be or anything like that, I am happy to do it. So thank you so much for your time today. I appreciate it. Again, we'll let you know. You'll get a replay of this as well for being on, so you can listen to it again or share it with anybody. But I really just want to answer your questions of what the market's doing, not pro, buy, sell, whatever it is. I want what's best for you. So again, if you have any questions about that, just let me know. Thanks so much. You'll have a great day.